So a very important topic that we should probably address and get out of the way right now for you guys that are subscribers to the channel, or if you guys have come across this particular video as a viewer, it's the topic of trading fees. And the landscape really is riddled with so many different people out there trying to win your business over, basically trying to take your money, okay? Now, trading fees is a very, very loose term, okay? But for the sake of this particular video, what I'm going to tend to focus on is the entry and exit fees to buy a particular stock, all right? Guys, if this is your first time tuning into the Independent Investor channel, I highly encourage you to subscribe to the channel. We talk about stocks, real estate, we talk about military investing on this channel. We are coming to you from New York City, New York, the Big Apple. This is really where all the financial action happens. I've been down to the New York Stock Exchange on 2 separate occasions. I've actually got to see what goes on the trading floor. And it was a very, very humbling opportunity. And a lot of what we try to do is empower independent investors or individual investors to know the power of investing and really to get you guys direct connected to the market. And there's a lot of different ways that you can do that. One particular way that I recommend on this particular channel is to get a self-directed Roth IRA started for yourself, so you can start to accumulate assets within those accounts, tax-free and wealth preserved going forward. All right. Now, the piece that I want to talk about and focus on so much is the wealth preservation piece, because I find that so many people so often want to just go ahead and start the Robinhood account because it's been advertised that they offer free entry and exit fees. Okay. Now, that's a good enough reason to start the app and download it on your phone from a brokerage perspective, okay? It's intriguing, it's alluring, and they are winning a lot of business, okay? Unfortunately, I think they are winning that business from a lot of people who really do not understand the impact of that short-term decision-making of starting a Robinhood account at the expense of a retirement account. And let me tell you why. If you're going to save on a $7 entry fee to enter into a particular stock, when you're first starting investing, how many stocks do you think that you really need to start your investment portfolio? I talk all the time. If you don't have any investing savvy, or you don't have any investment vehicles, if you don't have any 401k or 403b already started for yourself, you're starting from ground zero. You're starting from scratch, all right? And just to save you guys a little bit on the time, the right thing to do is to start your retirement account first. It really is. You got to get that account started first. But for you guys that are justifying starting the Robinhood account, it can really be a good thing over time. But I don't want you guys starting those accounts just to save on the entry and exit fee, because I would say that you guys are putting the horse before the carriage a little bit, okay? You're a little bit jumping the gun a little bit on getting your financial baseline set correctly, because if you're just buying a stock to save on the entry fee and maybe the potential exit fee, in Robinhood, when you buy a particular stock, let's say you buy 10 shares of Apple, all right? You've saved the $7 to enter into that 10-share position in Apple, okay? And let's say that's your first stock that you want to buy. It's a great stock. I'm not saying that it's not. It is single stock allocation. So if the technology sector takes a downturn, or the market overall takes a downturn, or Apple individually takes a downturn and misses iPhone sales on the iPhone 11, your stock is going to suffer, okay? Now remember, you've saved the $7 on the entry fee to buy that 10-share position in Apple, all right? So you get long the stock. You're like, okay, I've still saved the $7. Let's say I'm down a few $100 in that particular position, but you've saved the $7 and you do not want to sell for an additional $7 and save an additional $7 on claiming the loss, okay, on the short term, all right? So you're down a few $100 and you decide to get long the stock, okay? That's probably the prudent thing to do. Now, mind you, this all is housed within the Robinhood brokerage account, all right? Now, conversely, if you enter into that 10-share position in Apple and the stock runs up 30%. All right, in this particular example, you've still saved the $7 entry fee to enter into the position, which again is a good thing. Robinhood is a very disruptive app. That's great. You've saved the $7, but the stock has run up 30%. All right, it's run up 30%, let's say in 3 months, or 6 months, or 9 months. In each of those categories, you're still in the short-term taxable envelope of any trade that takes place within 365 days, 1 calendar year, all right, is going to be subject to a capital gains tax if you end up exiting that position within that year, okay? So let's say you go ahead and take the profit, okay? Remember, you've saved the $7 on the entry fee, and now you've saved the $7 on the exit fee, okay? And you exit the position after 9 months. All right, you have saved yourself $14. Congratulations. However, the $300 profit on that particular trade of that 10-share block of stock, you're going to have to pay capital gains tax on those dollars if you sell it in the short-term range. Now, you can save on the capital gains tax if you wait a year. Okay, now remember what I said. You sold the stock after 9 months. You still have 3 more months to get to that long-term capital gains scenario. So you're basically locked into a position and you don't have the maneuverability that you might like to take that jump based on earnings. The stock runs up 30% and you want to take some profits, right? It's reasonable, okay? Now remember, the reason why you started Robinhood was to save on the entry and the exit fees, okay? Now you sell out of the stock, you take your $300 and you're like, okay, I'll just pay the capital gains tax on it, right, as earnings, okay? I can guarantee you that the tax that you're gonna pay on that $300 of earnings is gonna far exceed the $14 that you've saved on that short-term trade, all right? Now, a lot of what we talk about on the Independent Investor channel is the fees associated with managed accounts, okay? If you have a managed account, a stock trade is going to cost you upwards of $29 to enter in a position. I used to pay that with my brokerage account. I knew it was like $50 to enter into a position. And if I'd complain enough, they could lower it to $34 per trade, right? And I got punished. I talk all the time in the history of this channel about a particular trade that I entered into that I was punished for actually making money when I exited the position. So not only did I pay the $50 entry fee to enter into the position, I paid a $300 exit fee to exit the position because I made $1,700 on the position, okay? Now, so that's in a managed situation, so you can really see how expensive it can be for you guys out there that are in managed situations, okay? If you're in managed accounts, all right? And if you do not know if you're in a managed account or a self-directed account, you need to know. And if you don't know, you're probably in a managed account. So if you called your broker up and you said, hey, I want to buy Google, or I want to buy Amazon, or I want to buy Apple, or whatever stock you want to enter into, there's probably going to be a very significant fee associated with that. And unfortunately, a lot of people compare the benefit to Robinhood entering into positions for free to the managed broker side of the house, where they're going to charge you these exuberant entry and exit fees, all right? Is there a middle ground? Is there a middle ground? Yeah, there is. And the middle ground that I talk about all the time for new investors that are starting out is to get involved with that retirement account first, all right? Now, anything from 0 to 25,000 or 25,000 to 50,000, you're going to enter into, you're going to pay entry and exit fees of around $5 to $7. It just depends on whether or not you're with E-Trade or Merrill Edge, minus $6.95, I believe, to enter and exit a position. But what it does is it allows you the flexibility to accelerate your growth up to that $25,000 threshold. And guys, you will get there. It allows you to take profits on your way to $50,000 or $100,000. It allows you to take those profits. Remember the first example that I talked about? If the stock runs up after 3 months, it runs up 30, 40, 50%. Guys, stocks do that, all right? They run up. And they don't just run up at the opportune time to let you wait for the long-term capital gains to kick in. They don't just wait for you. Warren Buffett says all the time, a stock doesn't have emotion. It doesn't care if it's waiting for you or you're waiting to enter into a long-term capital gain situation. It'll adjust back in that time that you're looking to wait for it to enter into that long-term capital gain situation. All right. Now within your investment account, yes, you will pay the $7 entry fee to enter into that position. But let's say it runs up $200 or $300. Wouldn't it be worth to pay that $7 additional to exit the position to realize that $300 accelerated profit within that? And here's the key. It's tax protected. You've maneuvered that trade within the protection of a retirement account, okay? Yes, the advice that I'm giving you is going to cost you $14. Am I comfortable with giving you that advice? Yes, I am. Because I know that long term, that accelerated profit that you have within that, it's more important to tax protect those dollars, both on the long term and on the short term, especially if you enter into some of these growth stocks that accelerate in their profits and you want to go ahead and take profits out of those. Guys, if you're locked into positions in the Robinhood account and you can't maneuver the way that you maneuver, guys, you might as well just shackle your hands to the floor. It's restricting your capability to accelerate those profits going forward. Now, the light at the end of the tunnel with regard to entry and exit fees has everything to do with those thresholds that I talked about, all right? You're going to have to endure a little bit of entry and exit fee initially. Now, some accounts give you incentive, free trades to enter or start the account, etc., etc. And those can really help you get your baseline started and get those passive investments started going forward so you don't have to spend, entry fees to start 5 positions in stock. They may give you those positions for free or up to a year of free trades, whatever the incentives may be. But the real benefit is realized when we've built these accounts up to $25,000, $50,000, and $100,000. And I'll tell you guys, I'll tell every last one of my viewers out there, you will get there. You will get there. Every last one of you. I do not care what your income is. I don't care what your capability is. You will get there, and I will get you there. All right? But you have to have a long-term perspective. And once you reach those financial thresholds within that retirement account, that's when that $14 entry and exit fee that you were so concerned with at the beginning and the validation for going and starting the Robinhood goes away. It goes away. Okay? Now you can enter into positions and tax protect the money. And you can also wealth preserve it by having a limit in there that allows you to trade for free. And that is the goal of where I'm trying to take you guys with understanding an upfront entry and exit fee for a much grander long scheme benefit down the road. Guys, thank you so much for tuning in to Trading Fees Kind of Exposed. I hope you enjoyed. If I've missed something, please leave it in the comments section. Leave your comments in general. If you know anybody out there who's holding a Robinhood account and you think that they can benefit from this particular explanation of short-term trading fees and long-term benefit explained, please share this link with anybody out there that you know that can benefit from the information, guys. Thank you so much for tuning in. Hit the subscription button if you have not subscribed to the channel. You'll be notified of any future videos that I put online. As thank you so much again for tuning in, and good luck in your investment future.